Hello and welcome to Weekend Investing Daily Bytes. We are shooting episode 306 today, 15th of November 2022. And we'll talk about how all-time highs, if not played properly, can become a very dangerous place for many to get stuck at. The conventional wisdom that is followed by most is that when stocks come to their 52-week highs or all-time highs, people are getting out. However, momentum strategies are almost sort of getting in at that point of time, given that the probability of stocks at all-time high doing well in the future is also very good. So you're playing that probability that most stocks that are hitting all-time highs will continue to do well, at least for some more time. And stocks that are hitting all-time lows or 52-week lows will continue to drop for some more time. That is sort of the essence of momentum investing. And we'll talk about the do's and don'ts when markets are at all-time high and how people are not able to capitalize on these moments in the market, you can say. Markets were dull in the first half of the session with hardly any movement. Nifty was dull and flat, but in the second half of the day there was some pickup. Nifty closed 0.4% up. Bank Nifty led the rally today at 0.7% with private banks leading. Auto stocks were also up at 0.6%, and the only space which had some profit booking was real estate, which was running in the last 2 days, and FMCG has been dull this entire week. Overall, this last 1 week has been a very iffy week with no major movements in any segment. IT has recovered a bit, but over the last 12 months, IT is still the largest loser amongst all sectors along with real estate. So, no decisive movement in the last 1 week. However, in the last 1 month, PSU banks are up 27%, and over the last 3 months, PSU banks are up 30%. So, PSU banks are actually the go-to sector right now over a 1 month to 3 month period. So as you can see, the broader markets all virtually flat or slightly in the green. The weekend investing strategies, some of them doing all right. MI20 up 1.3%, MI80H 2.8%, MI35, MI80H, NG 50/50 all up more than 0.5%. Others between 0 and 0.5%, and MI50 was dragging at minus 0.28%. Not a very particularly trending day for most of the strategies, but nevertheless pretty much in the ballpark of where the market is. This is the heat map of the day. You can see that ONGC was the major gainer in the energy segment. Coal India was the major loser there, minus 6%. In terms of banking, you can see ICICI Bank and State Bank of India do it well. In cements, Ultrasemco did well. Bharti Airtel did well at plus 2%. Power Grid did well at plus 2.4%. And it was sort of a mixed day with really no major losers besides Coal India and no major gainers besides ICICI and State Bank of India. Top gainers in the top 500 universe, Rail Vikas Nigam up 11% again. So this stock has been really doing very well. We have this in a couple of portfolios, really doing very, very well. NCC up 7%, Gujarat Gas up 6%, KEC International up 5%, and Mazagon Docks up again 4.8%. This also has done really well in several of our portfolios, almost doubled in many of them. So amazing run by these two stocks, and you can see that the public sector enterprise the flavor is continuing, although there are some dramatic falls today in Coal India at minus 6%. Nykaa dropped 9%. So after this bonus announcement, which did not allow all the lock-in shares to come to the market, and it has delayed it by some time. As people who had the lock-in shares could not sell all the shares as they have to wait for those 5 new shares to now come in as bonus, and once those bonus shares come in, we will probably see more selling. So this is already down in anticipation, I suppose, minus 9% today. Aster DM minus 6%, Campus active has been falling. I think it has fallen almost 70-80% now from the top, minus 5%. Uflex, bad numbers, I think minus 5%, along with Polyplex. So this industry is a bit struggling right now. So mistakes people make around fresh all-time highs is usually the excitement in the broader market. People who are not in the market, happens once the market starts to headline at all-time high. So you will see non-business dailies carrying headlines about the markets, about stocks going to all-time high, and these people usually will come in without any plan. So Nifty is in teji, so will be the narrative going around, and blindly these people will be telling their brokers to just buy maybe stocks that they have heard at last night's party, or buy Nifty, or buy some quality stocks. What is quality is again very, very subjective, and that changes from time to time. What may be quality 5 years back may not remain quality later. And there will be no plan around it. Fine, getting in at all-time high is fine. I mean, that part is fine. But then what do you do after that? Because you just cannot rely that you've got in at all-time highs, hence money will be made. So if we see some past experiences, this is the major rally in 92 simulated on Nifty. Nifty did not exist then, but Nifty has been simulated back. So 92, you can see this Harshad Mehta rally went, within the year of 1992 to 93, the index went from 500 odd to 1200. Actually came from 300 from the previous years, but just for this year, this last leg of the rally would have sucked in most of the people, because this is when everything is going mad. Stocks are going to 10-20% up every week or even more, and there is a lot of buzz around the markets, and your staff or your driver or your lift man is also talking about stocks, and everybody wants a tip. So that's sort of the obvious sort of very heated part of the market that most people will get trapped on. And then of course inevitably every bubble, every major exponential rally will crash. It'll take time for it to consolidate and then build up again. So this initial crash is the area where everybody is just bedazzled with the fall, and stuck with the like deer in the headlights of a car, not knowing what to do, whether to average, whether to exit, so on and so forth. And this rally after the fall is the reassuring rally that yes, we are going to a new all-time high, but then that falls also, and somewhere around here the market kind of crushes your confidence, and gets most people out of the market. So while the entire rally was 350%, but people get in the last 10, 20, 50%, but then they see this 53% fall within the matter of few months, and never return to the market. Another one was at so we'll look at all the past 3 major bull runs and bull ends, and this is no indication that we are anywhere near a top or we are going to exit like this, but this is just learnings from the past to be applied. Again, in the .com run-up in the last few months of 1999, we saw a huge run-up, almost the entire run-up 117% in the last 1 year, and then a sudden collapse at 51%. And of course, again, this rally would have sucked in even more people, or people averaged out, but then kind of very, very discouraging that it just kept falling, and then somewhere people capitulate and get out of the market. This is 2008. Of course, this was very linearly going up over many, many years. So this part or this part here could be the ones where the immediately people got sucked in at that top, and there was capitulation after that. But primarily here you can see that a huge rally, plus 600%, but then people who came in this last 3-4 months who got sucked in, and most people came in at this point of time in 2007-8, if you remember, would have lost 50-60% within no time after that. So you need to calibrate how you come into the market, how gradually you come into the market. If you're coming in at all-time highs, you're not coming in with all your money, you're coming in with a sip, with a longer term view. We've shown with a strategy, even starting at a top, if you're sipping, after 1 year we've clocked 25-30% XIRR in that. And more recently in the COVID crash, you can see how great quality names, Maruti, IndusInd Bank, Tata Motors, Bajaj Finance, Mahindra, ONGC, they all underperformed the index. Even in a small 3-month period, you can see IndusInd Bank 83% down, Tata Motors 65% down, ONGC 52%, Bajaj 48%, Maruti 43%, whereas index was somewhere around 30-35%. So huge underperformance even by amazing stocks. And then you can see that within the same time period, there were stocks which were outperforming. So, Bharti Airtel, TCS, Cipla, Dr. Reddy's, Asian Paints, Levers, Divi's Labs. So, pharma, IT, and some consumption stocks, they did quite well. Some of them even, clocking plus gains in the same period, where some of the other stocks are going minus 80%. So, stock selection, sector selection becomes extremely important when such kind of shifts happen in the market. And those selections essentially come around when you are having a plan, when you're having a strategy that shifts from one sector to the other. So, which is sort of the crux of momentum investing. So, the few lessons that we want to draw from this is: never get greedy around market peaks. Staggered SIP-based approach always wins. As I said, never bring your entire lump sum amounts at any point of time. Irrespective of your time of entry, please give 5+ years and sip regularly to give yourself a better chance, because you never know, you may be starting at the peak, or you may be starting at a bottom, but within a year there may be a peak, and all your money may not be invested at the bottom. I mean, you will be investing at the top also, and then allow a business cycle to happen on that. The objective is to focus on stocks that can do relatively well. So momentum investing will help you do that, whereas it will take out the weak stocks and bring in the stronger stocks, and sort of automatically rotate and keep the the fittest of the pack in the portfolio. Then this is, as we can see, is always the sort of the benefit of doing momentum investing. And there's automatic sort of downside protection in weak market scenarios also. In absolute momentum strategies, we'll go to cash, and in rotational momentum strategies, we'll go to the least impacted stocks, so that you are staying with the strength in the market. So that's the sort of gist of this daily bite, lessons to be drawn from investing near all-time highs. This is the disclaimer of our public disclaimer of our appearance, and all this information that we give out. This is all for more of educational and learning purpose. And thank you so much for your time. If you have any further questions, please send us mail to support@weekendinvesting.com. We have a fantastic support team that can take care of all your queries within no time. And if you like this content, please do subscribe to this channel and give a like. And if you feel worthy, that the content is worthy enough to share with your friends and family, please do so. Thanks. Bye.